Hey there, everybody. My name is Lewis Butler. I'm the National CNI Sales Manager here at Nelnet Renewable Energy. It's 11 o'clock on the dot Central Time, so we'll go ahead and get started. We'll have a recording, so anyone who shows up late can revisit all the fun stuff that we cover here. Just kind of like a few housekeeping tips. We'll say 0 on here. If you have a question at any point in time, you can put it into the chat or into the Q&A, and we will try to answer that either as we go or kind of at the end, depending on what the question is. We will send out a follow-up email with hopefully a whole bunch of the links that we shared today, and then we'll just kind of go from there. Just like your typical disclaimers, please don't take anything that we say today as legal advice, financial advice, accounting advice. The IRS just put on a webinar about this a week or two ago. We're definitely not providing guidance coming directly from the IRS. So check in with the appropriate person or entity that you need to, and know that we do not have final say on the implementation of everything that we're talking about today. We're going to start off the webinar with just a 10,000-foot view of what is elective, also known as direct pay. Then we're going to kind of talk about the updates or guidance that has come out recently at the end of 23 going into 24, and then what, if any, advice that we have for our customers who are interested. So with that, we're going to kind of start off with just a really, I don't say simple example, but an example of something you might see from our team here. And that is, why do we really care about direct or elective pay? So here's an example or a system that we've worked on in the past. A couple hundred kW. Total system cost here is $736,000. Historically, this federal tax credit would have been worth 30% or less. And if you didn't have a tax liability or you weren't a for-profit entity, this tax credit wasn't really available to you. But now, after the IRA passed, the Inflation Reduction Act passed in 2022, this direct or elective pay means that instead of a tax credit, a payment can come back from the IRS for the amount of the tax credit. So in this example, this particular facility is located in an energy community. So you should go watch our other webinars about what an energy community is. But the important thing here is it takes that base 30% tax credit and adds on 10%. So this nonprofit entity could be eligible for $294,000 of basically kind of like, you can think about it like a rebate check, although that may not be the best term to use, coming back from the IRS as part of this direct or elective pay package. So this is the dollar amount or the line item in our sales proposals that we are focused on here today. And so as you can see, that's kind of a big deal and a little bit of a game changer for a lot of nonprofits. And we'll get into who is eligible here on this slide. So where is elective pay or directive pay? Those terms are used interchangeably, and I realize that these slides are a little text dense, just a lot of information to try to convey. But nonprofits, so you could think of like a 501c3. You could think about schools. You could think about municipalities. There's a lot of other carve-outs or entities that are available here. But for our purposes of the entities that we're typically looking at, that's who we're thinking about. So you can see, the Tennessee Valley Authority, rural electric co-ops, different political subdivisions. But basically it allows those entities to claim these tax credits for installing clean energy projects, in our case, solar projects. So just by putting that check mark that you're applying for these credits on the tax return, and a little bit of application work that we're going to talk about, can entitle you or get that money coming back to you after your project is up and running. On the bottom of a lot of these slides, you'll kind of see maybe some source documentation that you can go to. We have a slide at the end where they're all kind of captured, and we'll probably link out to all of those in our follow-up email. So a lot more people are eligible than ever were before, which is pretty exciting. So the big question, that kind of came out in 22 through 23 is, hey, this is great that there's this direct or elective pay, but how does this process actually work? We probably spent about a year shrugging our shoulders because it wasn't exactly clear how this process was going to work. And then so the IRS and the Treasury, I think they're still in the process of finalizing a few rules, but they've kind of outlined the high points of what's going to happen. So, our team, which is great at just talking about whether or not your project could be viable or not, you need to identify first that you want to do a project. Hopefully you're going to contract with someone like Nelnet to do that project. You're going to complete that project and place it into service. If you've been in the clean energy space before, that place into service kind of has a definition behind it there. And then this is where, you're going to want to check with all the relevant experts, but you're going to determine what tax year that it was placed into service, and you're going to claim that on your tax return. You're going to then pre-file with the IRS. We have some slides coming up on kind of what that looks like. You're going to pre-file for that credit, and you're basically going to give them a whole bunch of information. It's basically who you are, what the project is, and how much you're expecting to get. Once you've completed that registration process, the IRS is going to give you a registration number that you can then later place on your tax return. So they'll look at your tax return, they'll see that you're applying for the tax credit and that pre-registration number, and then they'll know presumably to go and reference the project that you've already entered into the system. The IRS the other day was very clear and made a point to say, registration is not a final determination of the amount or validity of the tax credit. So again, this is all in the IRS's hands. And then you go and file your tax return, and if all goes well, you'll be getting a payment after your return is processed. So, on one level, there's a lot of work that goes into getting these projects off the ground and to this point. But on the other hand, filing this paperwork doesn't seem too overly onerous, at least on the surface, knowing that we haven't taken anyone start to finish through this process yet. So if you would like to know more or kind of read this directly from the IRS, you can go to their website, and they outline everything. You'll see, hopefully this is just showing up, they kind of have links to authorize or to create an account for first-time users. They have a publication, which we're going to link to, that's basically like a how-to guide on applying, everything from account setup to maybe which buttons to click, which is incredibly useful. But if you go to this website, this theoretically is kind of a one-stop shop, or the best starting point, in my opinion, on how to actually start this process. So I have a few screenshots from the webinar the other day that we'll kind of quickly talk through, and then we will kind of go from there. So you'll see just these questions seem really basic. You probably can't read it, but it's just, what kind of organization are you, right? Are you a governmental agency, a C Corp? So you're just creating kind of a basic account. And again, this user guide is going to have all the information you could possibly need. And I see Abe's question over there after Eric's. Yeah, we'll definitely send out the slides and this information following the webinar here. So anyway, you pre-file in some of your information. They will take you kind of on this guided tour of what you're doing. So they might ask what type of tax credit that you're applying for. Then they're going to ask for some supporting documentation, right? So what's the facility? I think they're asking for permits. So again, depending on what type of credit you're applying for, it's probably going to dictate what you need to upload. But they clearly have a spot to upload your documentation here. And one thing that I don't know how big of a deal they made it coming from the IRS, but it sounds like once you make your submission is kind of locked in. So you can go in, you can save your submission, but it sounds like you want to make sure that you have everything correct on your submission before you click the submit button, because they're not going to allow you to edit your submission after the fact. They're going to send it in, it's going to get reviewed, they might come back with questions, and then you might be able to change some things. But my general sense is that if you want to expedite your process and involvement with the IRS, you probably want to triple check all of your work before you submit kind of this as a final packet to the IRS. And then once it's been submitted, you're going to be able to go in and kind of check to see where it's at, if it's waiting to get assigned, if it's under review, if it's closed or open. But you should get that registration number that you're going to need for your tax return as part of this process. So, based upon the screenshots the IRS has shared and, they're pretty good guide, it feels like this is probably like more ironed out than like I think I probably would have hoped for at this point. So this feels like a pretty fully baked solution here at this point in time. So these are a bunch of the links that we're going to send out. This top link is kind of the how-to guide that goes along with the website that I just shared, which is this credits-deductions, register for elective or transfer of credits. Really clean, simple URL to go out and find there. And then there's a whole bunch of just other sources coming from the government, including the White House, kind of talking about direct pay at a high level. I think this publication, 5817, dives into more detail about who is and is not eligible, and things like that. So, screenshot that real quick, or if you're watching the recording, you can hit pause, and hopefully one or more of these links is still active here for the next couple of years to come. So in addition to all these online resources that are out there, and again, this might be a little bit hard to read, and we can forward this email coming from the IRS out to everybody if you're interested. They're also conducting kind of like online office hours directly with the IRS on these dates and times. So you can register to show up, and if we're not able to answer your question, or you want to hear it directly from the IRS, or there's some more clarity that might be able to be provided, they're hosting office hours at least for the next 3 or 4 weeks, which is kind of nice. So if you're in the industry and want to get some of these questions answered, or you're looking at a project and kind of want to get ahead of the curve, I highly encourage you to get in touch with whoever it is that you know at Nelnet, or you can reach out to me and we can get you this information as well. So I've been talking a lot there. So we'll kind of transition into Q&A. Hopefully a pretty quick and clean webinar today. There's a really nice website from the IRS with a lot of guidance built up around it. So I see Eric has asked a very good question here. What if your organization doesn't file tax returns? This is where I'm going to push you towards your accountant or your CPA or whoever you go to for that advice. But like off the cuff, nonprofit entities can file tax returns. I want to say off the top of my head, it's like a Form 990. Don't quote me on that. That's where my insights start to get a little fuzzy. But you can essentially file as a nonprofit and say, hey, we're a nonprofit. Here's our information, and then you just file for that credit or return. So I don't know all the implications or work to do that. If you've never filed a tax reform, I think that's going to vary based upon your entity type. I'm in a club locally. It's kind of like it's a flying club. Our flying club files nonprofit tax returns every year and kind of self-identifies as a nonprofit entity to the IRS. For our really small little group, it's not too burdensome. So your organization, you might have a different answer there along with that. So kind of have a couple of questions here I'll answer if no one else has anything else they're putting in the chat there. But is there a cap on the credit? So one beautiful thing about direct or elective pay is, unlike other competitive grant programs, there is no cap. So if you do a qualifying project and you're a qualifying entity, you should be able to get the credit, which is kind of nice. You're not filling out forms waiting for someone else to approve it necessarily. The next question, are PPAs no longer a good option? Kind of direct or elective pay, the most effective way to monetize tax credits was to enter into a power purchase agreement, in which a third party would come in, own the system, take the tax credits and depreciation, and basically sell power from that array. I think it really depends on your entity and the type and size of project that you're doing. I think that for a lot of entities, if you have an appropriately sized project, meaning it's getting bigger than say $500,000 plus, I think that PPAs are still a really attractive option, especially if you're financially strong. You don't have to come up with a large capital outlay for the project on day one. You're not really on the hook for O&M of the system, and you don't have to become an expert in filing forms and kind of project managing the whole thing yourself. So I still think that if your goal is simplicity and you just want kind of locked in and guaranteed savings, I think PPAs are still a very, very good way for a lot of entities to go. It's not for everybody, but I still think it's a valuable thing to do. And then kind of this last question, should I wait to do a project? I work in sales. I think it's always worth exploring a project sooner rather than later. So if it's not a good fit now, you might be able to identify if and when conditions change, and it will be a good project. And if it does look like it's a good time to be a project, you're kind of not waiting, because there is a lead time to getting these projects built of say a year plus in most cases. So if you're interested, I would highly encourage you to go to Nelnet Renewable Energy's website, nelnetenergy.com. Reach out to me, lewis.butler@nelnet.net, and we can kind of talk you through and give you a little bit more information. So I've seen some questions over here on the side. Robert's saying here, you realize there's a lot of variables, but approximately what's the percentage of investment that can end up being covered by grants? And I'm assuming by grants, he means all the various incentive programs. So depending where you're located at in the project, you're starting off with at least a 30% baseline investment tax credit that we've been discussing in this webinar. If you're in a state like Illinois that has the Illinois Shines program and a few other various incentives, you could be covering another 30, 40+% depending on the project with an incentive program like that. And then there's a wide variety of other grant programs that might be a little bit more local. So in some cases, you can get close to 100%. Never want to say the word free, right? But yeah, you're looking between 30 to 100+% in some of those cases. So that's where connecting with a consultant who's an expert in that area or in that utility will really shed a lot of light. Thomas asked that these projects must meet prevailing wage and apprenticeship requirements. I'm going to put an asterisk next to this. I want to say that is partially dependent upon the project size and location, but I want to say definitely a megawatt plus, you're going to need to be hitting those thresholds and standards, which any company doing a project of this size should be doing from a compliance point of view anyway. I know that we certainly will be, but that's definitely a good question to ask any company that you're taking a look at. And if you'd like, we can follow up after the webinar and maybe point you to some other resources or maybe get a cleaner answer to that. And then Dan is asking the question, are there domestic content requirements? That is a good question, something I'm definitely not going to go on the record other than this recorded video on today. In the webinar from the IRS, they did have kind of a footnote or a throwaway comment that because the guidance hadn't been clearly out there yet on how to apply, and some of these projects that are going to qualify may have already been built, there may not retroactively try to apply those domestic content requirements. And going forward, I'm not 100% sure on which size projects they'll be applied to and what they won't. So I realize that's not a fully satisfactory answer, but I don't feel like I'm in a position to definitively answer that in a public setting. So happy to take that offline, but my current understanding is maybe there's a little bit of wiggle room for current or previous projects, but going into the future, if you want to capture, I'm assuming you're talking about the full 30%, there might be additional requirements, or there might be a slight reduction of say 10% currently if you're not hitting those domestic content requirements, which, from our understanding, are going to be exceedingly difficult over the next couple of years to hit as well. So if you're not familiar on domestic content, also have a whole webinar domestic content that we would love to send your way as well. So, all of these are really great questions. Appreciate the quality of the questions there from everybody. If anything, I think it just, to me, it highlights that there's a lot to know, and there's a lot of specifics to everyone's project that are unique. And, this is where I feel like our team is really strong in getting clarity on those questions, or at the very least, hopefully admitting when we don't know, and pushing you towards the right resources so that people can make informed decisions. So I don't think that I saw any questions in the Q&A there. Emma will stop me quickly if that's incorrect, and I'm not seeing anything else in the chat. So with that, really appreciate everyone coming. We'll try to send a really beefy follow-up email, and please feel free to reach out to me or anyone else on the team with any questions you have, and have a great day. See ya.